Hi guys and welcome back to my channel Peeps and Profits, and I'm glad you made it to this 10th episode of the Forex Trading for Every Beginner. And in this episode we're going to be discussing what trading strategies are. What are Forex strategies? You may hear many mentors and instructors talking about their Forex strategies. We're going to be discussing the major things to look out for in every Forex strategies. Every Forex strategy should comprise of these five major components. And if you don't see these five major components, then you should ditch that strategy. Okay. So in this video, we're going to be showing you the five major components of every forex strategies. All right. But before we go into the components of trading strategies, what are trading strategies? What is a strategy in forex trading, or what is strategies in forex trading? Now, a forex strategy is a set of rules and techniques used by traders to make informed decisions. Take note of informed decisions about when to enter a trade or when to exit a trade, with the ultimate goal of achieving profitability in the foreign exchange market. Okay, so when anyone is telling you to come and buy his strategy, or you should come let him teach you or let her teach you their forex trading strategy, they want to just show you the set of rules and techniques they are using to make informed decisions. They just want to show you their rule book in making informed decisions. And the overall goal of all these rules are to make profit in the forex market. Okay. Now, with that being said, we want to look at the components of every forex trading strategy. We have five key components that I've done my research and I found out that if any of these components is not in the forex trading strategy, then I will suggest you either ditch that strategy or you complement that strategy with another one that has these components. But overall, these five components should be in every forex trading strategy. Okay, so whether you are an instructor or a student or a mentor or a mentee, you should be aware of these components. The first one is the analysis method. Okay, so every forex strategy should have an analysis method. There should be a method of carrying out analysis, and there are three basic analysis that um, every forex strategy should have. We have the technical analysis, we have the fundamental analysis, and the sentiment analysis. We've explained what these analyses are and these different type of analysis are. We went into details of the tools to use and the objective of every of these analysis. We explained that in the previous video. So if you've not watched the previous video, kindly go back to the series and click on the previous video and watch it. Okay. So we're saying that in every forex trading strategy there should be an analysis method. We should cater for your technical analysis, your fundamental analysis, and your sentiment analysis. Okay. Now the next thing that every forex trading strategy should carry or should have as a component of it is the time frame of operation. All right. So every forex strategy should be explanatory in the time frame of operation. Is it a scalping strategy? Is it a day trading strategy? Is it a swing trading strategy, or is it a position trading strategy? For swing trading strategies, they aim for small and quick profits within minutes. Okay, so if the strategy is around getting small or short-term trading or aiming for small and quick profits within minutes, it is a scalping strategy. If it is a day trading strategy, then it should be opening and closing position and making profit within a particular day. So any strategy that allows you to take trade that runs within a particular day is called a day trading strategy. All right. If it is a swing trading strategy, then it should be teaching to hold positions for several days to capture larger price movements. So if you notice that that strategy is teaching you to hold trades for a number of days, then it's a swing trading strategy. Then if it is a position trading strategy, it should be teaching you to hold trades in a long-term approach. You should hold trades with a long-term approach, holding position for weeks, sometimes months, and sometimes even years. So you should know the time frame that that particular strategy is capturing, so that you know how long you should stay and how much of a profit you should be capturing within how long or within a period in time. Okay. Now, the next thing that every strategy should contain is risk management. Every strategy should be able to teach you a particular risk management approach that is unique to that strategy. All right. And in risk management, we should be looking at our stop losses, we should be looking at our take profits, and you should also be looking at risk to reward ratio. All right. So risk to reward ratio is balancing your potential rewards against the potential risk for each trade. Let's say you're trading a $10,000 account and you're risking 10% of that account. Now, if you're risking 10% of that account, you want to know how much you are potentially targeting as your reward. So for 10% of a $10,000 account, you'll be risking about $1,000. If you're risking $1,000 to make $2,000, that is a risk to reward ratio of 1:2. If you're risking $1,000 to make $5,000, that is a risk to reward ratio of 1:5. If you're risking $1,000 to make $10,000, you're having a risk to reward ratio of 1:10. If you're risking $1,000 to make $100,000, that is a risk to reward ratio of 1:100, and so on. All right. So every forex trading strategy should be able to cater for risk management as a component of that strategy. Now, the next thing that every strategy should have is the tools and the indicators of that particular strategy. So every strategy should have tools and indicators that it uses. A few indicators are moving average, the Bollinger Bands, the relative strength index. A few tools are the trend line tools, the equidistant line tools, the Fibonacci retracement tools, and the likes of them. So every strategy should be showing you the tools that it should be that you'll be making use of while using that strategy. And lastly, every strategy is either trend following or a counter trend strategy. So it should be indicative in that strategy if it's a trend following strategy or if it's a counter trending strategy. A trend following strategy is a strategy that teaches you to ride on existing market trends and maximize profits. Okay, so when the strategy is teaching you to follow the trend, it's a trend following strategy. But if it's teaching you to go against the trend, then it's a counter trending strategy. Okay, so when you're counter trending or when you're trend following, it's dependent on the strategy that you are using. And mind you, any of these methods will make you some profits, but it depends on the strategy you're using, how you're using them, and how you're analyzing them. And finally, how much you are risking on these strategies. Okay, so I hope this video was helpful, and with this, you've understood what a forex trading strategy is. So whenever a mentor or an instructor is telling you about a strategy, you should be looking out for these 5 important components. If they are all in the strategy, then it's a good strategy to use. If they are not all in the strategy, then it's either you're ditching the strategy or you're complementing it with another strategy that has these tools or these components to make it complete. I hope this video was helpful. If it was, click on the like button as a way to support us, and for us to keep making this content like this. You should subscribe to this channel and share this content with your friend. Share these videos with your friends who also want to become forex traders, and we'll be able to take you from beginner level to an intermediate level, and from an intermediate level we're going to take you to a professional level with videos like this. All right, until we meet again in the next video, I wish you good luck and good trading. Cheers and God bless, guys.